We're going to get earnings this week, Jim, from GM. And also, as we watch Brent at 60, I know David mentioned at the top, JPM's going to host a call this morning about what they're arguing will be a massive underinvestment cycle in crude energy on top of a oil super cycle and sort of the risks of massive infrastructure underinvestment.
Oh, no, oil super cycle. Whenever you're super cycle, we got to duck. The oil is at 60. The curve says 5 years from now will be considerably lower, 48. Back in November, when oil was much lower, the curve also indicated 48. So the curve is, the forward market is not signaling this is going to happen. Of course, we wonder at what point did the Saudis say, you know what, we're going to take the money and run here. But I will point out that Feb 10 is a very important day because Mary Barra, apropos of that commercial, is so committed to ending fossil fuel cars that I think you're going to say to yourself, we can talk all we want about Tesla, and Tesla's going higher, obviously. Bitcoin will go higher. But Mary Barra is not going to be left behind. Similar to the way Jim Farley said he would not be left behind at Ford. David, it is kind of an incredible moment where you see short-term oil going up, and yet you have people at major companies, and by the way, major countries, we could make fun of, but that are so committed to getting rid of fossil fuels, long haul, cars, whatever, or move to green hydrogen, that it's going to be a clash of the titans. And I don't think it's going to get to 2030 with oil still climbing. I think oil peaks.
You do. I do. Mean, because, you know, when you do speak to, if you speak to a Mike Wirth, for example, who runs Chevron,
sure,
or any of the other CEOs of the major oil companies, they will tell you, listen, there is an expectation that will occur over time between now and let's call it 2040. But at the same time, Jim, they'll still say the amount of money that was on CapEx this year was far below what was spent in 2013, right, when we were nowhere near, you know, what we're still consuming now. So even if we go like this in terms of consumption, there's still not enough money being spent to find new sources. We're going to need it, or else there is still going to be a big price tag attached to the commodity itself.
I'm not going to disagree. The budgets are down. By the way, the federal lands, people keep asking me, what is Biden really restricting? The federal lands that would be drilled on are just some areas west of the Permian Basin, actually in New Mexico. So that itself is not going to cause oil to go up, our own drilling or lack of.
Right.
Pipelines very hard to build. That could make it so that more oil's trapped here. But, David, look, I think it's really going to come down to when we listen to Mary Barra talk about the fact that she's committed, say, to a series of 2030 expectations, and whether we can get the batteries, David. One of the reasons why, and I happen to like GM at the quarter, one of the reasons why we are so struggling to try to figure out is how quick this is going to be, is that the alternative engine and the alternative batteries, we can't just turn on a dime, David. There may not be enough of the ingredients in batteries to make enough batteries. So we're all very glib that we have them. GM does have a very good battery operation.
Yeah, the question also becomes, Carl, right, exactly. What all those batteries, all the charging stations that are going to need to be put in. I mean, this is years to come, not to mention the power generation itself for all those cars that are going to be now relying on the electricity grid as opposed to pumping gasoline. It's going to be a fascinating transition. Yep. We're watching it occur, of course, in the capital markets every day in terms of the speculative nature of some of these names for companies that some will be the leaders and some will fall by the wayside, as we said earlier.
They're not all going to win, yeah. David?
No,
Carl, don't they all win? No.
Well, I think to David's point, transitioning from a network of gas stations to a complete reliance on the grid over the long term raises risks about not just investment in the infrastructure. There's cyber issues as well, national security risks. So, yeah, it's a giant pivot. By the way, Jim, it sort of brings us to what Tesla said in the 10K, not just about Bitcoin, although that was obviously the major news, but this notion they said that microchip demand in personal electronics, because of everybody buying iPads and PCs during COVID, is now having an impact on them, just as the chip shortage at large is having an impact on the industry in aggregate.
But I think that Ford had a great quarter, but then Jim Farley correctly identifies maybe $1.5 billion, $2 billion comes off. You can't find the chips. The chips are in some ways being hoarded by the Chinese. They do not have just-in-time. We have spent a huge amount of time in our country having just-in-time inventory. Make sure we don't need we take the chips the second we need them. And what's happened there, Carl, is made it so that if you have a just-in-case philosophy, which China has, you're getting all the chips you want. It is going to hurt GM. It is going to even hurt Tesla. They can make it, but it's an 18-month start to finish. And, of course, there's a lot of moves to have foundries built in this country. It takes a long time to build a foundry.
Shepard Smith here. Thanks for watching CNBC. on YouTube.